Good morning, everyone. This is Marshall Giller bringing you the morning comment for January 14th. It's getting to be a familiar pattern. Commodity prices fall, Fed funds rate expectations fall, and yet the dollar rises. Copper collapsed last night, and corn futures fell too, which is more important than you might think, as corn is used in a surprisingly wide range of products. Brent was lower as the oil minister said OPEC would stand firm on its decision to keep output unchanged. In this context of falling commodity prices, Fed funds rates expectations receded another 5 basis points in the long end. The news on jobs, however, was favorable, which, as far as I'm concerned, raises the likelihood of the Fed tightening on schedule. Contrary to the disappointing average weekly earnings figures, the National Federation of Independent Businesses survey, Employment Diffusion Index, and Worker Compensation, DI, both rose. These indices have a good correlation with the Employment Cost Index, which makes sense as most Americans work in small businesses. Thus, yesterday's news corroborates what I said about the average earnings possibly being an aberration. So I see those figures as dollar positive. The mood on the Canadian dollar is definitely turning bearish as dollar CAD approaches 120. Bank of Canada Deputy Governor Timothy Land gave us a dovish speech yesterday in which he said, quote, "Lower oil prices are likely, on the whole, to be bad for Canada," unquote. And he said the Bank of Canada would be watching for their impact on the economy. So falling oil prices will not only depress CAD through the terms of trade channel, but also through monetary policy. That means it's doubly bad, and the Canadian dollar is likely to weaken further, in my humble opinion. Today's highlights during the European time, the big thing is that the European Court of Justice is expected to give a non-binding opinion on the legality of the ECB's outright monetary transactions program. The OMT, introduced in 2012, is an earlier bond purchase program created in order to allow the ECB to buy debt from distressed countries if necessary. If the court's advisor expresses doubts about the OMT, this could have an adverse impact on the effectiveness and the design of a broad-based ECB quantitative easing program through buying government bonds. The markets are likely to assume that this would reduce the flexibility of how the ECB might structure any QE program, and so it would probably be positive for the euro, since expectations of QE have been negative for the euro. On the other hand, an opinion that supports the OMT would probably just keep the common currency under selling pressure and perhaps could even accelerate the downtrend. As for indicators, the French CPI for December is expected to drop to 0% year-on-year, in line with the overall deflationary conditions in the Eurozone. In the UK, Bank of England Governor Mark Carney and his mates on the Monetary Policy Committee testify at the Parliament's Treasury Select Committee on the Financial Stability Report published in December. And in the US, we have retail sales, excluding auto and gasoline, are forecast to remain unchanged. Also, the Fed releases the Beige Book 2 weeks before its policy meeting, January 27th and 28th. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.